Hey, welcome everyone. I think it's a pleasure to be here with Brian McMillan. We'll talk about Brian very, very soon. But I think what I would like to say is thank you for everyone who reached out to me and Andrew and the feedback that you gave us. Like you subscribing to the channel on the Spotify or YouTube, or even like our content. It's really something that for us is quite precious, and we will appreciate if you guys could continue supporting us. Today I have Brian McMillan. I mean, Brian is, I wouldn't say a dinosaur of the South African structured products industry, but close. Yeah. Brian has more than 25 years of experience, all at Investec, right, Brian?
Briefly at Barclays in between, and started my career in equity derivatives back at Standard Bank in the 90s. So, yeah, long time.
Well, yeah, a lot of experience. So look, today we want to discuss South Africa, and it's a very interesting market, and we will talk more about it. But I think what's interesting compared with other markets is, of course, the onshore versus offshore, which we'll talk about it. And it's quite important, especially for advisors in across Africa and other regions like Latin America and some Asian countries. Brian, if you had to describe structured products in South Africa, how would you describe that to someone who doesn't know?
South African structured products have quite a long history, going back to probably around 2000. And Investec, in fact, started in 2002 with my colleague Biliver doing his first structured product. And I think the evolution has been slowly building until probably just before COVID. I think there was 2018. They really took off, and they took off for a number of reasons, which we can talk about, which is, the ability to invest offshore was a big boost for structured products in South Africa. And that was allowed by some regulatory changes. And then, since then, the growth has been quite exponential with growth year on year, just getting bigger and bigger. I think we've probably grown at between 25 and 30% as Investec for the last 7 or 8 years in terms of volumes.
Okay. Look, if we talked about in terms of South African versus other markets, you've traveled a bit, a bit the other different markets. What do you say it's the big difference between, let's say, South Africa and the European markets or the Asian markets?
So I think where structured products came from in South Africa is quite important. The first structured products that I spoke about that Investec did in 2002 and some other issuers also came in then, they really started off with the traditional equity linked notes almost, 100% capital protection, geared upside to an index. And initially, those were over international indices, but the market for that was very small. And the reason for that is that South Africa had pretty tight exchange controls from the late 80s, which stretched into the early 2000s. So the only people that could really invest in them were people with money that they'd already externalized. South Africa is in a sort of unique position, being Africa. Investors were always looking for a safe haven. So structured products filled that because it had the capital protection and allowed exposure to offshore markets. So investors almost saw it as a nest egg that they kept offshore. Initially very much London, but now initially very much US dollar based throughout the world. Yeah.
So I think you already touched that subject, but who are the investors of structured products in South Africa?
So very much it was high net worth individuals to begin with, because they were the only people who had access to this offshore money. And when there was tight exchange controls, that it was very much high net worth individuals. Yeah. And that's why the banks moved into that space. Also, some of the IFAs. So the IFA market in South Africa is quite sophisticated in terms of investment. And as South African investors, high net worth individuals tend to use, because of the nature of being able to invest offshore and onshore, you need, a good wealth advisor who understands the tax and regulatory environments. So it was very much aimed at high net worth. What we did do in sort of 2008, 9, 10, is we started listing them on the JSE, the Johannesburg Stock Exchange. And I think that opened it up more to a much larger audience. Because they didn't have to have offshore money only. They could invest in South Africa. And over time, we've seen that grow from almost exclusively high net worth individuals, or QIs, I think they're called internationally, to where we now have some of our stockbroking businesses and our online businesses actually doing these on a fractional basis, so fractional share basis. So it really has changed from the whole spectrum.
So let's talk about, because that's quite interesting, right? I mean, structured products in terms of high net worth individuals, right? It's one of their favorite products, right? Together with their personal investments on PE and others. But it seems to me, where's the growth coming? Is this more on the high net worth individuals who are keep growing the AUM and exposure to structured products, or does it comes more for these new electronic, I wouldn't say retail, right? But more on the, let's say, exchange traded business?
Yeah, so I think the growth has been across both. High net worth individuals have taken advantage of the new regulations that have come in. So in 2002, as I said, there was very strict exchange controls. By 2008, they had allowed investors to invest some money offshore, and at the time it was a small amount. It was 1 million rand, or at the time $100,000. That was extended to 4 million rand, which $400,000. Nowadays, most investors can, if they wish to, they can apply and get 10 million rand a year per family member, which is about $500,000. But yeah. So then, the market has grown in that side. But then what we did was, by listing them on the JSE and making sure we allowed further people, because there's also another part of this. So you can gain offshore access by trading a structured product that references offshore markets and is dollar denominated or pound denominated, but listing it on the exchange. And that again opened it up to more and more investors. And so probably from around 2018, the retail investor got involved, whereas before that it was the high net worth individuals. And of course, from 2018 to 2025, we've had this huge bull market, notwithstanding the fall that we had in COVID, the V-shaped recovery, and the performance has been very good. So we get more and more investors on a daily basis interested in these types of structured products.
So I think you highlighted a couple of things, right? Which is, of course, US dollar denominated versus South African rand. I mean, how important is and how connected is the success of structured products in South Africa being issued in US dollar, pounds, and other currencies?
So I think for the high net worth individuals, it's been very key because, as I mentioned, the South African investor was always closed off to the rest of the world because of those exchange controls. So they were underinvested offshore in US dollars. And of course, when somebody took money offshore as a South African investor, they wanted it, they almost saw it as a nest egg. So they didn't want to lose money on that. And so structured products filled that, that capital protected part, filled that need for the investor to have a nest egg that was outside of South Africa, but had the capital protection. And that played a big part in the growth, I think, early on. Nowadays, of course, the rand investments, because if we see quite a lot of products, and we've just closed one yesterday, is if you do quanto rand over international indices, you benefit from the interest rate differential. We have very high interest rates in South Africa, around about 10% per annum is our our overnight rate or repo rate. And so when we're buying options over the S&P or over the Euro stocks, we get this pickup by doing Rand products. So, for example, an auto call over the Euro stocks, annual calling, 5 years long with a 70% barrier, might give you 10% in US dollars. We could get up to 15% by doing it in Rand. And of course, there's a benefit there. And certainly in auto calls, which I'm sure worldwide, is investors have a preference for the higher coupons.
I think it's interesting, right? Because we talked about these many, many years ago, right? When I mentioned to you, like, the Taiwanese market had so much South African rand reserves, and partly is because they were creating these capital protected structured products because of rates being much higher in South Africa, of course. Always capital protect. I remember seeing 10-year capital protected with 200% minimum return guaranteed. But of course, you have the FX risk, right? And I think it's quite interesting how South African investors think, okay, how do I manage this FX risk and, of course, the macro risk between the US now, Europe, South Africa, what is happening in China? How important, how relevant structured products are to manage that let's say, macro/FX risk?
Yeah, so it's a double-edged sword. So internationally, some people are looking for these higher yields. We've seen the South African rand over the last 5 years really vacillate between, in COVID, it blew out 20 to the dollar. By 2022, it moved back to, 15 to the dollar, then back out to 21 as we had some issues around electricity and stuff. And it now seems to have stabled. And the outlook is that the rand will sort of strengthen from its current levels. It's now down to 1770, 1760. And when we see that, the times of stability in the rand, we see people coming in for those higher yields because, if you can get a Nikkei order call paying, 17, 18% in rands, and the rand strengthens against the US dollar, in a year, you get an even bigger pickup. So we have seen some of that playing out as the outlook for the rand has looked a little bit more stable than it has been over the last couple of years.
Okay, very, very interesting. So you already mentioned a couple of times, of course, auto call balls and capital protected participation notes. What's popular in South Africa?
So the South African market has really, and we've been at the forefront of it. We've almost split our business into two parts, where we have a Guernsey structure that's been going since 2002, as I said, where you buy a share. We've always maintained those as 100% capital protection, hard currency, participation on the upside to a basket of indices. And then the other side of our business, the business is sort of split 50-50 between that, has been more capital at risk, so barriers, downside barriers. And of course, since 2010, auto call market has been where we've seen a lot of growth on our listed products. So we almost split our business into two different parts, which is very capital protected, vanilla upside against basket of indices or major indices, and then the order calls and sort of 3.5-year digital trades, where we try and give as much return as possible by giving the investor some sort of protection, but not all the protection. And we do quite a bit of back testing on all of our stuff. One of the things we have learned, though, is that we learned early on that the South African investor had some bad experiences with decrement indices around about 2000, and also with thematic indices. We've been very successful in staying quite vanilla. Maybe we let them listen early on, but certainly we've seen all the rise of these thematic indices. It's almost as if by the time the retail investor gets involved in some of these thematics,
Too much.
the hedge funds are selling out of it, and that story has run its course. We've seen that with things like cannabis indices, megatrends, clean energy. And so we've pulled back from that and focused on the large international indices to give investors a spread. A lot of our products are over S&P, Eurostoxx, FTSE. Recently, we've been doing some over the China market, CSI 300, Hong Kong, India even, which has been an interesting one.
Wow,
We have
that's interesting. On your main index?
Yes, so we've actually used for hedging purposes, we've used ETFs. So we rather use an ETF traded in the US as the base. In fact, South Africa has a large Indian community. I think at one stage, certainly it was the largest Indian community outside of India. So we had a lot of interest in that. And then, of course, an easy way to get access and to diversify a portfolio where you don't have the knowledge of the market is to use structured products. So we've always said, if you're going to go into a market where you think there might be growth in the future, a lot of people have interest in China, specifically since, it looks like their property bubble is playing out, that there's a bit of stimulus in there. And then all of a sudden, the AI story came out of China. And we're saying, it's very difficult for a retail investor to go, okay, I'm going to go buy stocks in China without the research. But if you bought the index itself, put some capital protection on it, you can get that exposure quite nicely.
It's a very good, yeah. I like your idea because it's not about looking for that alpha. It's more about managing the actual exposure, right, to the different regions and get alpha that way, or a little bit of alpha. Now, you talked about rates, right? How much higher in South Africa. That really helps capital protected products. I think it seems that you guys are very bullish on the brand, or at least slightly more bullish than a few years ago. And what about the equity volatility? I mean, I know you're mostly doing offshore exposure, right, as you said, but there are other players who do, South Africa exposure into the local equity markets. How do you see that equity volatility playing within not only your products, but of course your competitors?
So we do have quite a few products over the top 40 index, which is the large tradable index in South Africa. Interestingly, the way that because of the high interest rates, auto calls don't work. So when you have high interest rates, your forward is very high. So we don't see any auto calls over that. And instead, we look at geared products. So trying to gear call spreads provides, some downside protection. And in fact, the South African equity market has done particularly well over the last year. And over the last 2 years, we had obviously a rough time with when we had electricity challenges, that in 22. But the equity market returns have been very good. And of course, we don't use order calls for what I mentioned. What we do is we offer geared exposure, and that has worked very well over the last couple of years.
Okay. So look, we talk about this market growth that you see, especially at Investec. How do you reach out to investors? How do you educate them? So
our sort of strategy has always to be to use IFAs, private banks, wealth managers. We run our structured products within the corporate investment bank. Our biggest client is Investec Wealth and Investment, which is probably one of the biggest wealth managers in South Africa. That certainly helped us initially to grow because we use them. But, we've spent a lot of time because we've had a lot of time, as you mentioned earlier. I'm not a youngster. And we've actually, myself and Yapi, who works with me out of Cape Town, we have a very broad network of advisors that we've built over the 25 years. And we've been very fortunate in that time. I think, just some of our numbers. We've done 106 different products to the
Mhm.
South African general market. We touch wood at this point. We've had no losses in that time. Our products have always provided at least capital protection. 96% of the time they gave a positive return. Only 4% did they actually return only capital. And that kind of trust has been built up with those IFAs. So it's very much a trust thing with a lot of our IFAs. Obviously, as the market has grown, we put them onto platforms, onto South African investors make use of the JSE quite a lot. A lot of them have stockbroking accounts. They use their stockbroking platforms, and we put them on there. But that's become a feature of our business, is that we are very much aware of not trying to chase higher coupons by using different types of indices, decrement indices, vol controlled indices. We'd rather go with the main indices, and it's really been part of our success, is that those indices, and of course we've been fortunate since 2010, when we've done most of our products. From 2010 onwards, we've been in a pretty strong bull market since then. Markets have been very strong. We've had our pullbacks. I mean, we've had the Greek crisis in 2010. We've had the COVID ones. We've had the April, but pretty much most of those over a 3 or 5 year period, the market has recovered, and investors have benefited.
So, look, your story, yours and Appy, look, it looks great. You guys built a very good franchise. I've seen it growing, but again, you're growing 20-30%, right? It's not exploding. What are the challenge on educating clients on structured products?
We've done a lot of work in South Africa. I remember a few years ago, you came across and did some presentations and some workshops. As I say, we've done a lot of our work on a one-on-one basis. We do have a structured product academy as well, which we offer to our advisors as part of a training module, and that has been one way. And of course, we don't work in a vacuum, and certainly as people have seen the success, we've started to see more and more competition coming in. Initially with one or two of the international banks. And then, of course, the South African banks have also, got into the business in the last couple of years. Every time there's a product out in the market, it means that there's somebody out there talking to advisors, talking to investors, and the knowledge base grows. Funnily enough, I think since 2010, one of the best methods that we've found, since 2020, has been the growth of podcasts and webinars. We sponsor quite a lot of webinars across some financial news websites. Sponsor those. We do webinars, and for a small South African bank, we get 400 or 500 investors coming on board, asking questions, listening to our webinars, and that's before the download. So the interest is there, and webinars and podcasts have really been a way that we've got that stuff out there. I don't think there's any trade magazines nowadays that we advertise in that we used to in the 2015, 2010. There's no more of that. It's all online.
It's on, right? Yeah. Well, just to be clear, Brian did not sponsor this podcast, not this one, at least not this time. The other thing which you're raising, right, is digitalization. Now we have AI, automation, right? You're not the only one who has a lot of experience, right? When I started this 15 years ago, it was all manual, right? It's putting the term sheet together, phone with the regulator, where to put the comma and the dot, and how they wanted the product to be explained to clients. Now, digitalization is completely changing. I can tell you, like in Europe, there's between 50-70,000 products every month. Investment products only. I'm not taking into account the exchange ones. In the US, there is around 1,800 to 2,000 products available every day for US investors. So How is digitalization changing the South African market?
So we've been a bit slower on that side, and we have spoke to a lot of our advisors. We've spoke to a lot of our retail investors, and one of the things that they've said to us is an overload. They have an overload of product. You can imagine. I mean, 1,000 a day. We focused very much on building tranche-based business, and the way our structure works in Guernsey, it's a share structure. We focus on when we roll the product, keeping as many investors invested as possible and growing it on that format. We haven't embraced any of those digital platforms where we are able to issue lots of different products. Our typical year is we like to do large tranches, less than 12 products a year, but some of those products or tranches are bringing in 100 200 million US dollars, a billion rand, and then we concentrate on making sure that they are rolled into the next one and that we keep that money in there. So very different from how fragmented Europe has gone.
Yeah.
And I think that's probably part of that is probably that we don't have these large digital platforms. Very much everything has stayed on the stock exchange. The Johannesburg Stock Exchange is the biggest and pretty much the only one used by most investors. But obviously, over time, we're cognizant of what's happening in Europe and the US, and there's no doubt that over time there will start to be more and more of these products. And obviously when you do that, then you have to have somebody like yourselves, because the ability to churn out all the documentation on a daily basis is not possible. It's not possible.
Yeah, true. So let's talk about the future. I know it's always difficult, right? You never know if there is a COVID happening in a couple of weeks or months, or another war coming in. So, but what do you think in the long term? What are the key trends that you see happening in the South African structured products in the next 5 years?
So I think we are certainly looking at quite a lot of the same, and providing capital protected products into the offshore market for the South African investor.
Yeah.
As those South African investors' assets grow outside of South Africa, we'll be looking to capture some of that. So Switzerland is one of the areas that we're looking at, obviously a big structured product place, and a lot of South African investors' assets are there. The UAE is another one, Dubai. We are looking at those all the time. We don't have a presence there at the moment. Investec does have a presence there, but not our, structured product side. And then to really stick to our knitting, Tiago, we haven't got carried away with some of these, as I mentioned, the decrement indices. We haven't chased coupons. We haven't chased, higher returns at the cost of lowering our, I almost want to say, lowering the underlying assets or devaluing it, because we've stuck with the big indices. We stuck with these trades, but I think certainly digitization within the next 5 years, the AI models, agents are going to enable us to issue more and more products, and to really allow the South African IFA and wealth advisor to pick their own structured product as they get more and more comfortable with it for smaller denominations. At the moment we say to our clients, this is our next product. It's only going to trade in 4 or 6 weeks' time. We're building the tranche, get ready. We'll be trading in a month's time. And at the moment, most of those are comfortable with that. But I think, for an investor who wants to put, $100,000 into the market and wants to do it immediately, that's where the digitization is going to take place.
Most interesting market trend right now?
Definitely the switch to AI and getting capital protection on some of these large stocks that have run so hard for late investors, I think.
Okay. So one book or podcast or resource that you recommend to anyone to listen or read?
I would say
Okay, great. So coffee or tea? Green tea. Good. Brian, look, thanks so much for listening, participating. I mean, this was quite interesting. South African market is not very well known by most people in this industry. So, and I think that the value on offshore managing, risk, especially with FX and how rates are much higher in South Africa. I think it's a very, very, very interesting topic. Yeah. So thank you very much, Brian. Okay.